You need to hear this if you're an investor, or just curious about how the stock market really works. The New York Stock Exchange and the NASDAQ, two titans of Wall Street, are constantly in the headlines. But what actually sets them apart? Sure, both are places where you can buy and sell shares of companies, but the differences go way deeper than you might think. From the companies they list to the way trades are executed, and even their unique cultures, there's a lot to uncover. So what really separates the NYSE from the NASDAQ? Let's dive in and break down the 5 key differences you need to know. First up, let's talk about how these exchanges actually work. When you hear about the stock market, you might picture a chaotic room full of people shouting and waving papers in the air. While that's a bit of an exaggeration today, the way stocks are bought and sold is still fascinating and important to understand. The NYSE is what's known as an auction market. Think of it like a traditional auction house, but instead of paintings and antiques, we're talking about shares of companies like Coca-Cola or ExxonMobil. In this system, buyers and sellers come together, each trying to get the best price possible for their shares. The process is competitive, with everyone submitting their bids and offers at the same time. Buyers and sellers place bids and offers, and the highest bidder wins. The price you see for a stock is the result of this ongoing auction, where supply and demand meet in real time. This helps ensure that the price is fair and reflects what people are actually willing to pay or accept for a share at that moment. Now this all happens electronically these days, but there are still real people on the floor of the NYSE, facilitating these trades. These professionals, known as specialists or designated market makers, help keep things running smoothly by matching buyers and sellers and making sure trades go through efficiently. Their presence adds a human touch to the process, even in our digital age. The NASDAQ, on the other hand, is a dealer market. It's completely electronic with no physical trading floor. Instead of people gathering in one place, all the action happens through computers and networks, making it faster and more accessible for traders around the world. Instead of buyers and sellers directly interacting, they go through market makers. These are essentially firms that hold inventories of shares and are willing to buy or sell them throughout the day. Market makers play a crucial role by providing liquidity, which means they're always ready to step in and make a trade, even if there's no immediate buyer or seller. This system helps keep prices stable and ensures that you can buy or sell shares quickly whenever you want. Speaking of the trading floor, that brings us to our next key difference, the physical presence or lack thereof. The NYSE is iconic for its bustling trading floor in the heart of Wall Street. It's a tangible symbol of American capitalism, with traders shouting orders and the iconic opening and closing bells. The NASDAQ, however, is entirely virtual. It operates as a decentralized network of computers, which means trading can happen from anywhere in the world, 24/7. This difference in format reflects the types of companies each exchange attracts. The New York Stock Exchange, often referred to simply as the NYSE, has long stood as the beating heart of American finance. For generations, it's been the home of well-established blue-chip companies, those giants of industry that have weathered economic storms and shaped the global economy. The NYSE is steeped in tradition with its iconic trading floor and a history that stretches back over 2 centuries. Think big household names like General Electric, Johnson & Johnson, and JP Morgan Chase. These are companies that have become synonymous with stability and reliability, often forming the backbone of many investment portfolios. Their products and services touch nearly every aspect of daily life, from healthcare and finance to energy and manufacturing. These are companies with long track records, large market capitalizations, and a reputation for stability. Investors often look to them for steady dividends and consistent performance, making them a cornerstone for those seeking lower-risk investments. Their influence extends far beyond Wall Street, shaping industries and economies around the world. The NASDAQ, on the other hand, is pretty much synonymous with the tech sector. Unlike the NYSE's old-school charm, the NASDAQ is known for its digital-first approach and its embrace of innovation. It's a symbol of the future, where technology and rapid growth take center stage. It rose to prominence during the dot-com boom of the late 90s and early 2000s, when a wave of internet-based companies captured the world's imagination and investor dollars. The NASDAQ became the launchpad for a new generation of businesses that would go on to redefine how we live, work, and communicate. Today, it remains the go-to exchange for tech giants like Apple, Microsoft, Amazon, and Google. Companies that have not only transformed their industries, but have also become household names across the globe. Their innovations drive the digital economy and influence everything from entertainment to commerce. But it's not just tech companies. The NASDAQ also attracts a wide range of growth-oriented businesses in sectors like biotech, renewable energy, and even cutting-edge startups. These companies are often on the forefront of scientific discovery and technological advancement, making the NASDAQ a hub for those seeking the next big thing in innovation and growth. Getting your company listed on a stock exchange isn't as simple as creating a profile and hitting publish. It's a process that can take months, sometimes even years, and involves a mountain of paperwork, legal reviews, and financial scrutiny. Think of it as trying to get into an exclusive club, one where the bouncers are accountants, lawyers, and regulators, all making sure you meet the dress code before you're allowed in. Both the New York Stock Exchange and NASDAQ have listing requirements that companies need to meet, but the NYSE's standards are generally considered to be more stringent. The NYSE is often seen as the gold standard, with a reputation for hosting some of the world's largest and most established companies. Its requirements are designed to ensure that only the most financially stable and reputable businesses make it onto the trading floor. To list on the NYSE, companies typically need to have a higher market capitalization, more years of profitability, and a proven track record of financial performance. This means showing consistent earnings over several years, demonstrating strong corporate governance, and providing detailed disclosures about your business operations. The NYSE also requires a larger number of publicly traded shares, ensuring there's enough liquidity for investors to buy and sell without major price swings. This focus on stability and transparency is part of what gives the NYSE its prestige. The NASDAQ, while still having requirements, is generally seen as more accessible, especially for companies that are newer to the public markets. Its standards are designed to encourage innovation and growth, making it a popular choice for technology firms and startups that may not have decades of financial history. For younger, faster-growing companies that may not yet meet the NYSE's more established criteria, NASDAQ offers a pathway to public investment. It's a place where ambitious entrepreneurs and disruptive businesses can access capital, even if they're still in the early stages of their journey. This difference in listing requirements is another reason why you see a lot of startups and smaller companies opting for the NASDAQ. It's not just about prestige, it's about finding the right fit for your company's size, stage, and ambitions. The velvet rope may be there, but there's more than one way to get inside. Finally, let's talk about the intangible reputation and perception. The New York Stock Exchange, with its long history, physical trading floor, and stricter listing requirements, is often seen as the more traditional, prestigious, and stable exchange. It evokes a sense of permanence, reliability, and old-school financial strength. The NASDAQ, with its focus on technology, innovation, and growth, is often perceived as the more forward-looking, dynamic, and even volatile exchange. It's associated with cutting-edge companies, disruptive technologies, and the potential for rapid growth, and yeah, sometimes rapid declines. Neither perception is inherently good or bad, it just depends on the company and its investors. So there you have it, the 5 key differences between the NYSE and the NASDAQ. As you can see, they both play crucial roles in the global financial system, but they cater to different types of companies and investors. The NYSE, with its blue-chip companies and traditional values, represents the bedrock of American capitalism. The NASDAQ, with its tech titans and growth-oriented companies, embodies the spirit of innovation and disruption. Which exchange do you think is more influential? Let us know in the comments. Both exchanges power global finance, but they do it in very different ways. Like and subscribe for more Finance Explained.